What's up? Morning.
Talking
Morning.
about wait. This is like fuck it. Fucking Friday, like fuck it. We're just doing it. We both just got together, everyone. So welcome aboard.
You don't even
This
know.
is Crazy Friday.
You don't
Yeah.
get to know what happened, okay?
Holy shit.
Good morning, everyone. Welcome to Crypto and Coffee, where we talk about crypto and drink about coffee. So,
Good
Huddle.
morning. Good morning, everyone. We are good to go.
well, anyways, this week's been cool. I'm like in a great headspace right now. I'm the Data Lord. This is Jaime, in case anyone doesn't know. And we like to play Bitcoin games.
Precisely. Look at where we enter, where we exit, and where we huddle.
Kids these days. So let's go over the markets real quick. We'll do a market update. Jaime certainly got some cool things. We had a little bit of a shotgun pull, with Bitcoin's price, but let's look at the markets and how they reacted, shall we? So looking over here, we can see that the general market, Bitcoin right now, it's down 3.9% for the 24-hour. Imagine that. It's not like we've been talking about what's about to happen. Yeah, I am
Show me the charts.
sarcastic.
I'll tell you the news.
Forgive me. Ethereum being a copycat, copying what Bitcoin's doing. Imagine that. And then everybody else kind of bleeding out. Why is that? That's because Bitcoin is the leader in the space. Whatever Bitcoin does, you'll see
the shark came out. And now
Yeah.
little guppies and everyone are running to their little hiding places.
Yeah, before Daddy pulls his belt out and gives the boy a licking. Litecoin is also a copycat for Bitcoin, because it's kind of basically the test net for Bitcoin, and it got kicked in the nuts 6.6%. So that's that general market view. It's okay. It's a great buying opportunity, quite honestly. If you're looking at DCA, it's DCA Friday. Not a bad time to do it. Also, please forgive me. We do roll call, and what roll call is you say good morning in the chat, you say what's up, something like that. Before we get into the stories after market update, we'll give you a shout out because we love you and you're part of the show.
That's so right. We do it for you.
Yeah, we think you're nice. We think you're nice. So looking at the very big picture, right? I don't know if anyone who's new has seen this or not, but that's okay if you haven't. We basically have a big S curve that shows Bitcoin's price over time with the halvings. And the reason it's an S curve is because the halvings are every 4 years cutting the introduction of supply rather, of Bitcoin in half. So miners get paid half as much Bitcoin from the introduction of supply, and they start just getting paid more and more in transaction fees as Bitcoin's adoption increases. So this mechanism built into Bitcoin is actually pretty genius by Satoshi. What this does is it creates scarcity. And so as time goes on, there's these market moves where it's almost like the ante is upped. It's like everyone's playing poker, the ante goes up, and blinds are $600 kind of thing, right? So that just keeps increasing it. And if we look in, we really zoom in on where we are currently, you can see we basically roll off these bands. Okay. And people pay a lot of money for these types of charts because they are really, really telling. And so we want to give that to you, the lay investor, so that you can have the same information to work with, right? So you can see right here, we have this bottom yellow line. Well, we're bouncing up right off that. We bounce, and then had a big shoot up to this key level right here, and now we're coming back down. It's possible we tap this again. If we do, it's 18, and it's also possible we flash down to where we previously touched on. It's not likely to happen, but it can happen. It sure can.
Yes, it can. It happened in 2014, and it's happened in the past where we flash below that S curve And this S curve is part a lot of new technologies actually there. Do you see it right below? I know the green hides it, but you can
Yeah.
see the dip. It's about a good percentage
Right
down.
here, you can
Yeah.
see this wick I'm on right here. It
Mhm.
did flash below the yellow, so it's not
Correct.
unprecedented that could happen. That's what Jaime is saying,
Correct.
right? This is
Yes.
2014 we're looking at. We
Yes.
wicked down to $159 for Bitcoin.
Damn.
Wouldn't that be nice?
Can you imagine the guy who sold that bottom? Is like,
Well, he probably
no,
swing trades. He's probably not
he
crying at all.
better. Better.
You're not in
Someone
back
had to
then
be on the
and
selling side too for that
not
swing
still in it.
trader to get in. So
Yeah, it was just people buying drugs probably, but who knows? Uh, so that's like the big picture though. That's why we're really watching this with anticipation.
Mhm.
Anticipation.
Oh
Yeah.
yeah, we have our
Uh,
triggers. We're waiting for the whites of their eyes to pull our trigger.
yeah. Well, we're not going to hurt anybody, but we're it's more like a squirt gun. We're gonna squirt them.
Squirt.
So this is my chart that I'm looking at, right? So these are the key. These are daily candles, by the way. This is my shorting, longing. So basically, we banged against this bop bop twice and got rejected. And that's what I was expecting because we had these two double tops up here. And so as that comes down, um, we're gonna find out if we're gonna bang on this 21. If we do and we fail, we're probably finding a way down to 18K. So just a little view
Keeping
here.
it
Again,
real.
this is not financial advice, but I'm certainly paying attention to these key levels. And Jaime has some very interesting content here too. Go for it.
Yes. So now that we're on that subject, of course, it's a red day for everyone. On the right hand side, you can see that. The only one is the staking platform. One of the new ones that's expecting the staking to Ethereum staking to get going. But back to what really matters. Bitcoin, what is it doing? At this moment, guys, this is the monthly candle. We just closed February pretty much even, which was an indecision candle. And as if you recall, we've been having this conversation for a while now, ever since December into January, where we want to see what happens. And if you notice, the rejection from that 50 moving average is occurring as we speak. This is a perspective from the growth. So now we're looking at the levels. So the next level from down here, and we'll zoom in closer from the monthly in a second, but I want you to see from the macro perspective where we can touch. So the possibilities are 21,400, which was the Luna collapse, the beginning of it. And we have some news today where we still see bloodletting from that collapse. And I won't ruin it, but there's a bank, an off ramp for crypto exchanges from fiat into crypto and crypto into fiat. One of the big banks that have been around for a while are in trouble. So we'll look at that. But here we go. It continues to affect the market. And remember, I don't know what the news will be. No technical trader, usually they don't care about the news. Usually the news will match what the chart
Yep.
is telling you. And this is prime example. If you just replay our videos Monday, Wednesdays, and Fridays, we're telling you what the chart is saying. We just don't know what the triggers will be in the market. It's almost like doctored, guys. There's a narrative. It's uncanny how this works. But we see 21,400 region as the next support layer, and you're going to see how this matches the 19,000, the one at the bottom of this, your 19,500 more or less, is the next support zone. And then, of course, the bottom where we rallied off of, which is sitting at 16,500. We have the 89 moving average coming up here at 15,200. And then the one I've been watching for a while now, is the monthly level top at 13,800. The big question is, what will happen next? So let me move on to the weekly, where you can see even closer what's going on. Remember on Wednesday, this week, we're already telling you that it was rejecting off of the 200 and the 50 on Wednesday. telling you, hey, watch this, take profits. This is the time where if you're already in green, take some profits, because there's always the next entry. My next entry levels are these levels: that Luna collapse, the original, also the monthly level in 19,400, 500 area. And we're going to zoom in even closer now. So we're getting lower on time frames. Take a look at this. This is the 3-day, and you can see we're even exiting the previous. So if I were to stretch this down to where this was before, you can see that we even broke this level. You can really see the break of it when I move down to the daily chart. So now the single day. And here, a lot of day traders look at the daily chart for decisions. Here's an important thing that's occurring in the charts today. One, we came out of that ascending channel, broke down below the 50 moving average. Watch this spot today, guys, because this is going to be critical. This level right there. You can't see the 200, but see this red one right here? This is the 200 moving average. Look at the price. It's about 19,750. Just above the 19,500. You see how the 19,500 to 700 is an important level to watch today. The one right before that is, of course, the FTX breakdown point. So we should see some bounce, some drag through the 21,300 region where we broke down from. Now we're coming down to test that as support. We may see a slight bounce off of that in the short term. My real target and my first entry for long-term swing trade up is truly this 200 daily moving average, which is at 19,700 to 19,500 region. That's what we're going to be watching closely over the weekend. What happens next? But watch the chart itself. Do you see the price has been rising up until yesterday? It has been on this rising channel. But look, while it's rising here, the really stupid indicator, or the relative strength index, is that rocket fuel, that impulse that you feel, the rocket rising. You should feel as we're reaching the horizon, the edge of the atmosphere. You should feel even harder push forward if we were bullish. But ever since our run up in January, I've been telling you that we seem to be losing the strength as the price rises. The strength down here has been coming down, which tells you, and that was the foreshadowing of this pullback right now. That's how you really can tell if there is true strength up. Even though you saw Twitter and the news and everyone saying, oh, Bitcoin to 30,000 or rallying up, you could see the strength descending as the price was going up. That's a bearish divergence, meaning there's not enough fuel. Although the price looks like it's rising, the strength keeps losing, coming out. There's no true oomph into this move. So that's why now I'm looking. Now, keep in mind, though, that rise we had in January is a good rise. Like, there was volume behind it and the strength rose to it. It just couldn't keep it up there. So, but on top of that, here's the important thing. This shows strength in January. So to me, it's a bottom formation occurring as we speak now. The question is, will we bottom at the 19,500? Or will we bottom where we were prior, where we took off from? Or do we keep going down to the other levels? I am not going to risk it myself. Literally, I'm placing orders down from the 19,500 all the way down to 9,200 is where my swing longs are at. Not financial advice. I'm just sharing with you all my mistakes and what I'm doing, and holding myself accountable to anyone watching also, like, hey, this is what I see. Now, these are the probabilities. So everything's about probabilities. You do what you need to do your own research, but this is what we're looking at. Now we should see what watch. And this pullback is a healthy pullback. We need to pull back so we can gain strength and rise again. So keep your eyes on this move, and we should be an interesting weekend. It should be a pullback weekend. And the big telling sign will be how does this close today? Does it close below the 50 moving average? If it does, over the weekend, we should see it tap it as resistance, or if it closes above, that means it's confirmed support and we continue rising up to this bottom, this channel price. But with the strength coming down, beware of longing at this price level. If you're a day trader, here's a profit opportunity if we close above the 50. If we do not, look out below and start setting your buys for the long term. That's it. That's pretty much what's going on with price action.
Juicy. That's pretty juicy, actually. Like just the fact that we see the bottom formation really starting to come in.
Yeah.
It's nice. It's kind of like, hey, everyone, have your money ready, because whenever the quick move happens, you want to just capitalize on it. So
yes, when these capitulations, that's what they're called. They're fast, guys. So if you don't have your trades ready, you may not catch it. You may end up chasing it back up. So that's the importance of doing your research and seeing where these bottoms could be. Spread your entries, and of course, always use money you can afford to lose, because all this is probabilities. You're just playing the market, but in a way that you try to put the odds in your favor, of course. And when it flashes, your entries should just hit boom, boom, boom. And hopefully it shows, and it comes with experience and making mistakes.
Yeah, so that's it, man. Roll call. What's up? Indo Crypto.
Good morning.
Reporting for duty. Hope you have a rad week, man.
Yeah.
Boston, what's up, boy?
How are you, sir?
Good morning to you. Happy Friday, man. Happy Friday. Yeah. Indo says 16K is what he calls the hungry hippo zone.
Yes, without a doubt. There's quite a few people watching that, guys.
Yeah, it's like that. Yeah, just Bossy. What's up, bro?
Good morning, man.
Yeah. Indo saying Jaime doesn't talk the talk. He also walks that talk.
Yes, I make my mistakes in public.
Yeah, I stress my family out in public with this. Oh, man.
Yeah, it's the only way to do it, guys.
That cracks me up. My wife, she's like, why did you just move that much money? I was like, don't worry about it. Don't you worry about it.
Don't mortgage that house, please.
No, nothing reckless for sure. But like I said, I'm buying that dip, baby. I'm buying that dip. So let us get into the news, shall we? So our first article for the day, Polygon. Hey-o. Polygon launches Web3 identification service using zero-knowledge proofs. Why would this be important if people are developing applications and signing in as a normal feature set?
Yes.
So let's check this. So Polygon, the Ethereum sidechain, released a Web3 identification service called Polygon ID that will allow blockchain-based applications to authenticate user credentials without compromising personal information. And I still have roll call on this. I apologize. Forgive me. Kids these days. Polygon-based crypto and NFT projects such as Kaleido, Fractal, and Collab.land have already shown support for Polygon ID, which is accompanied with a developer toolkit. Make a Play-Doh snake, y'all. Make a Play-Doh snake, y'all. The offering can verify user data for blockchain apps while maintaining privacy on chain. It uses zero-knowledge proofs, or ZK proofs, which can authenticate data while keeping it encrypted and hidden for the verifying party. I'm vibing with that, man.
Yes.
So it's like trust but verify, but there's basically there's a like hash layer in between so you can know that it's legitimate because you know how the service works, but basically your information isn't there. It's almost like in some cloud systems, like just for example, like Office 365, there's a thing called password hash sync, where basically a hash of your password is stored and that's used, but your password itself isn't stored on cloud, right? So it's a known pattern. It works in enterprise, and I'm glad that we're seeing that kind of show up in blockchain, because blockchain's starting to really grow up and get its ugly teeth, its adult teeth grown in that are a little bigger than they need to be for its face, but it'll grow into them. It'll get braces,
They look cute though. It does look cute.
Some huge teeth. Got a chipmunk.
What's up, chompers?
Yeah, what's up? Yeah, so look at this. So Polygon ID could be beneficial in compliance using cases such as Know Your Client, or KYC, process required for centralized exchanges, permission DeFi platforms, as well as fiat payment for on-ramp and off-ramp. It also works alongside Polygon's wallet. So Polygon ID enables compliance for both Web 2 and Web 3 industries. Isn't that beautiful? Mm-hmm. Which strengthens the regulatory framework through Know Your Customer and AML checks. The reusability and self-sovereignty of credentials also reduces the cost, time, and complexity of user onboarding and user verification. Let's go. A project spokesperson said in a statement, so Polygon Labs core developers have integrated this identity toolkit technology into Polygon ZK, which means zero knowledge, EVM, which that's how you basically have virtual machines that are running smart contracts on Polygon, which is expected to launch later this month. So literally like March, this is going to be production. Like, that's rad. And I know we talk about tools all the time in this space and how we're constantly getting new software developer kits, new toolkits that make it easy for excellent applications to be developed. Well, this is another drop in that bucket. We're coming into very, very fertile times. And let's make some crypto babies, right? Let's make some applications, let's make some stuff that's cool, and we can show everyone we know how cute they are.
Yes, they're building, guys. No matter what the market does, price-wise, everyone watches the price, but not very many watch what is being built. And that's the difference between OGs and the old community. This community that we're building currently together, all of us, we understand that regardless of what price action does, because that foundation is being laid, you will see that growth coming up. So if you remember the old Amazon days, back before the .bomb, it was growing. It fell with the rest of the market, just like crypto may fall with everybody together. It rose like a phoenix. And that's what we're going to see with these projects that continue building, regardless of what price action does. So you may hear soon, within March, as we mentioned on Wednesday, March may be a bloody month and we may see a lot of shakeout going on, but the builders are the ones that are going to rise above this all. And Polygon is one of those puppies that are, I believe, long run, are building the right thing.
Yep, totally agree. And Indo's laughing at you. He's laughing at you. They're going to laugh at you. So I just want everyone to see that this space has tools that are being developed that are legitimate. They are world class. They're really starting to grow up in their applications, and they're becoming in parity, in step with enterprise solutions. So big companies with big money are starting to go, okay, this isn't just an experiment. It looks like it's now actually past some of the experiments and we're into real production. Here's some money. Go build something that corners the market. That's when we hear these conversations, by the way, the circles that Jaime and I are talking with, people are often kind of bringing that up. They're bringing up that like there's viable tools in the space and they want to corner the market. And so like we're showing you this to kind of tip you off. Like if any of this interests you, you should really go and see what it takes to develop this stuff. It's going to be hard work, but it'll certainly pay out, and it will be fun because the people who do this type of work are really passionate about what they're doing. So Yep. So along with other tools, let's talk about our next story here. So Solana. So Solana proposed network upgrade changes following recent outage. So yeah, they recognize the outage was very faux pas. They don't want to do it again. They're trying to figure out what can be done to prevent that kind of thing from happening and just to improve the experience in general if they can. If you can fix a problem and make it better, you really win twice, right? So let's read this. Solana co-founder said plans are in place to improve network reliability. The Solana network suffered a significant outage on February 25th, leading to downtime that lasted close to 20 hours. It was the first interruption of service to occur this year. However, 2022 saw 11 major outages. Oh no. Say it ain't so. 2022 saw 11.
I remember those. But SBF was throwing money like it was water at that time.
Yeah, well, he whips out all kinds of things, and 3 minor ones, cementing a reputation for poor network reliability. Yeah, it'd be like that, don't it? So they said last week's outage was related to the 1.14 network update, which was intended to bring speed and scale improvements. Up to 1.14 release, core engineers were working to fix live problems that were impacting the network speed and usability. These issues included invalid gas metering, lack of flow control for transactions, lack of fee markets, spiraling RAM storage, and restart overhead. Yeah. So I can speak to this just as a guy who's supported servers for a long time. These guys were doing good work, and sometimes when you're doing that stuff, like, you're bushwhacking, you don't know what's going to happen, and that's kind of what happened. They were in good faith trying to fix it, and some craziness happened because we do it live, right? So I'm actually not going to throw shade at them for this one. Just figure it out and don't let it stay in this state for very long.
Yes.
However, the rollout,
building.
You have to. Roll with the punches, baby. However, the rollout of 1.14 update triggered significant network degradation, the cause of which is unknown at this time. Even still, an investigation to determine the root cause is still ongoing. So they still haven't figured that out, according to this article. Solana focused on network stability. So addressing this issue will focus on improving the software release process for updates. This will involve using external developers. Okay, so this is how they're solving the scaling problem of, like, our guys are busy, we don't know what to do. They're using external developers to solve this. They're basically hiring contractors to help fix this matter, and auditors to hunt bugs and exploits. So other changes include forming an adversarial team, basically a hacker team, to build additional hooks and instruments into the validator code for more thorough testing. So they're basically going to try to pop it as hard as they can and see if they can break it on their own, so they can kind of control when things break and be able to reverse them, knowing what they poked and prodded it with.
Do you think they should be doing things like Ethereum, where they do these hackathons with bounties?
They do. They just said they have bug bounties. This whole hunt for bugs and exploits.
Okay.
They're paying people to specifically do bug bounty.
Okay.
So yes, I do think they should, and I think that's what that implies right there.
Thank you.
So nodes should be automatically discovering the latest optimistically confirmed slot and sharing the ledger with each other if it's missing. So they said over the past 12 months, Solana was already working on improving network stability through various initiatives, including building a second validator client, better tooling, upgrading the network communication protocol to QUIC. I actually don't know what that is. I'll look that up later. And improvements to RPC, remote procedure call infrastructure. So they're doing real construction. They basically put Solana out. They tested it. They saw if it was good enough, and it said, no, I'm not good enough, and here's all the things that break. And so now they're being really diligent about hiring more hands to get on this and swarm the issue until it's solved. So that is exactly what prudent business wisdom would tell you, right? Swarm the issue, get all hands on deck, solve the problem, get over it quickly. Just pull that Band-Aid off and rip it, right?
Yep.
Even if it means you have everyone in the house grocery shopping, and someone at the house isn't cooking, everyone's going to get back and you're going to have all the ingredients to cook. You're not going to have hangups. So that's kind of the idea here, right? You swarm on something, get a ton of people to focus on wherever you're bottlenecked, and you knock that bottleneck out and you get back to business, right? And that's actually a good business point. Like if you're ever building a business, this is true of families and nonprofit organizations too. Any optimization you make after the bottleneck doesn't freaking matter. You know why it doesn't matter? Because you're still bottlenecked. You're not going to feel any of those optimizations you made. And so it's always recommended to swarm the issue, is the language used. You have a lot of people who are normally doing things, all focusing their efforts on fixing that bottleneck. Because once that bottleneck gets fixed, everyone can get back to our scheduled programming, and we can figure out where our next bottleneck is and swarm that, and that creates efficiencies in the entire system, right? So that's a little bit of business wisdom. If you do that, you're gonna make a lot of money.
Yes,
really, you're gonna make some stupid money, because there's a lot of people in important, high titles that don't do that, and their companies suffer for it. So just hear that out. Fix and focus on wherever the bottleneck is. Fix it and be serious about it. Like, beat the snot out of that bottleneck until it's done, right? And then move on. So anyways, I won't beat that to death, but here it's pretty important. It's pretty important.
Precisely.
So commodities versus securities, a third option for crypto regulations, makes sense. Yeah, I can't agree more, actually. That is a good looking steak with legs. That's steak, right? There's steak
Yes,
here,
it is.
and a steak here, and a steak here. Anywho, so one of the main topics that dominated the crypto market so far this year, let me zoom in, this is stupid. So man, one of the main topics that dominated for crypto markets so far this year is the topic of regulation. We've heard that word once or twice. The numerous black swan events that occurred last year highlighted the need for crypto regulation. Many industry participants agree that cryptocurrency regulation is the right path for the industry, mainly for consumer protection. I don't know about that. I have mixed feelings.
I know, control, but we give up security for security, control for security. So we give it's a bad process. We should be self-sovereign when it comes to these things, but a lot of people are choosing to give up those liberties for security.
Yeah, I have mixed feelings on this, specifically because to me it kind of feels like you're pulling punches on people, and do your own research is so serious. Like, if you don't do your own research, there should be some protections against people promising one thing and not delivering it, maybe.
100%.
But as far as like how the government's going to use that as the exploit to get in and then overreach, that's what I'm concerned about.
So as long as there's humans in that level, because we're supposed to be putting people to watch out for the community, for America. If we put them in power, they should be for their constituents. They should be for their people. And that's the concern here, because like we saw with the FTX debacle, so many politicians had their hands greased, and so they could lean in a certain favor. And certain government agencies that should be watching were actually have in bed. It creates that's the risk of us over relying or giving too much power to the people in power. They forget that they are there for the people, not the other way around, for their vested interests or investments. It should be for everybody. And that's
someone needs an ass whooping, I'll say that. Anyways, so to read this, many industry participants agree cryptocurrency regulation is the right path for the industry, mainly for consumer protection. Coinbase CEO Brian Armstrongy was, that's not his name, it's Brian Armstrong, was among the executives who expressed their opinions about the industry and regulation. As far as regulation is concerned, Armstrong noted that Coinbase sought out money transmission licenses from the beginning. So Coinbase is like, dude, like we've literally been trying to play your game this entire time, and so don't freaking put us in a compromised position when we asked you for help and you spat on us, right? Like don't exasperate good people, right? No win situations are no win for anybody because you piss off the wrong person, right? Whatever the hell that means. So crypto is the most important technology that can help update the financial system, says Coinbase CEO Brian Armstrong, who has a lovely bald head. The rest of the world is trying to draw crypto companies in the U.S. risk falling behind. Or the U.S. really risk falling. I can't speak. The U.S. really risks falling behind. Say that 5 times fast. That's kind of a tongue twister. Yellow leather, yellow leather, yellow leather, right? Armstrong's statement underscores just one of the numerous regulatory facets of the crypto industry. The companies are easy to regulate, but there is a gray area where it comes to regulating cryptocurrencies. Existing regulatory frameworks have dictated that cryptocurrencies can either be categorized as a commodity or a security. Wow, we've talked about that. The unpopular opinion: categorizing cryptocurrencies based on the rules set in place for the traditional financial system might not necessarily be the best way to go. I completely agree with that statement. Like, we're kind of dealing with things that aren't traditional finance. Like, we have these new things that exist and we're trying to stick them, square peg into a round hole. And why doesn't it fit? It's like, yeah, it's a different thing, dude. Like, this is new. This isn't exactly the same as other things you've messed with, right? Like this concept of a decentralized autonomous organization, just literally having a smart contract that acts as a business to execute the business's like agreement.
It's
like
truly rewiring the traditional finance. It's completely gutting it.
Oh, by the way, the state of Wyoming now allows you to register a DAO with the state of Wyoming as a business. So you can literally register a decentralized autonomous organization smart contract as a business with the state of Wyoming. So Wyoming is freaking shaking it up, dude. They're rad. So shout outs to all my cowboys in Wyoming. What's up? The reasons for this point of view cut across multiple factors, including definitions of underlying technology, or definition and underlying technology. There have been attempts to classify cryptocurrencies and tokens based on consensus mechanisms or methods of distribution. And I don't think that's the way to go either, because there's all sorts of things in the space that are like a twist on the same idea. Do you classify that as the original idea or do you put it in a new category, right? I don't know. Bitcoin and Ethereum were both considered commodities because of the proof of stake consensus mechanism. What are you talking about? Bitcoin? Proof of stake? I don't know. However, Ethereum. I need to go and spank whoever wrote this. You wrongo. However, Ethereum transitioned to. Okay, I see. They just want this to be proof of work.
Work. Yes, yeah,
precisely. So, typo.
Okay, typo. Errors
Gotcha.
and omissions.
Gotcha, bitch. So, Bitcoin and Ethereum were both considered commodities because of proof of stake, proof of work, consensus mechanisms. However, Ethereum transitioned to proof of stake in 2022. But does that really make it a security? Well, good question. By definition, a commodity is a useful and fungible economic resource that has value. Commodities are usually tangible. Most commodities exist within physical realm. Hence, they can be touched. Does that mean peaches and eggplants are also commodities? I think so. This is not the case for Bitcoin, which relies on decentralized digital medium. Mining is the main reason why Bitcoin is categorized as a commodity. Because it takes work to get it out and about. Ooh, get them! Kids these days. Securities are generally any type of tradable financial instrument that have attached value and can be traded. The wild card for cryptocurrencies is that they are decentralized, hence making it difficult for regulatory control. In addition, They operate on a global market, hence traversing multiple jurisdictions. As such, enforcing traditional regulatory measures may not be the most efficient way forward. 100%. 100%. This is we're dealing with a new pattern, and they're pretending it's the old pattern, and it ain't. This ain't the old thing. So why a different path might be necessary from a technological point of view. Cryptocurrencies are much better off with an entirely different rule set. The traditional regulations may contribute to some extent. Yeah, they act as basically a point of consultation, but they shouldn't be like the full definition, right?
Mm-hmm.
But the key theme here is that they are within the digital domain. This is the first time the world has a technology that overcomes the double spending problem. Thank God for Bitcoin. One that is capable of facilitating the evolution of the internet into a more powerful tool. The decentralized nature of most cryptocurrencies makes it more difficult to implement traditional regulations. Yep. On the other hand, go ahead, please.
No, I just wanted to highlight that the importance of the double spending.
Oh, sure.
That's the problem that finance has had in the past forever. It's like back in the olden days, if you had gold bars, you couldn't double spend it unless you went to one merchant and says, "Hey, give me this. Here's my gold bar." But yeah, I keep it and walk over to the next merchant. "Hey, give me this. I have a gold bar," and you just create contracts with others that, okay, for that gold bar, I'll give you this. But it got to the point where now you had long distance relationships where you would promise through the double spending is where you could create two contracts and rug pull one of them or both of them, and they never got their money, yet they sent you the goods. Through this technology, they resolved that issue of the double spend where you can show you have it and then make two promises simultaneously. That mechanism is what revolutionized the revolution that Bitcoin implemented into its white paper. And that's why it's so revolutionary. It's the best engineered money out there, hardest money too.
Yeah. And if you're liking the show, go ahead and give it a like and subscribe. It helps other people find this so you can help your noob friends stop getting wrecked. How does that sound? But absolutely. But Bitcoin is solving brand new problems in unique and innovative ways. And I don't think the world has caught up to that reality yet. But let's keep reading this piece here. So the decentralized nature of most cryptocurrencies makes it more difficult to implement traditional regulations because there's no CEO in a lot of these, right? Like the protocol is just out and about. Like, so who are you going to hold accountable? The people who built it? Well, no. The people who bought it? Well, maybe, but it doesn't fit the exact same pattern, and they're trying to pretend it does. So, on the other hand, it makes more sense to implement regulations that will keep corporates, I think that means corporations, and other market participants in check. Perhaps the best approach is to have an entirely new system of regulations in place, a system that allows the crypto market to blossom while boosting consumer protection. So, shout outs to Michael Nadridu. You need to do some spell checking on your site, my guy. No shade, but helping a brother out. So, Jaime probably has a lot of opinions about this one. This next article brought to us by Decrypt. Bitcoin miner capitulation has been completely different this cycle, CoinShares. The CoinShares analyst said the latest downturn has been completely different than the past thanks to orderly capital markets. So a cycle of miner capitulations can be observed throughout Bitcoin's history. When times are good, miners stockpile their Bitcoin, restricting the supply of new coins during high demand and serving as an additional multiplier to the general upward price trend. While times are bad, though, like the past few months, miners sell their Bitcoin treasuries, usually to cover operating expenses when mining is less profitable. Like when Bitcoin's price is low, or to pay off over-leveraged positions. Oof, Jaime, talk about that.
Yeah. So
no.
When does this occur? The payoff over leverage position is when they FOMO into mining. And we saw a shit ton of that this time where even the ones that surprised me, that would do this, which have been around for a while. One of them was shit. Well, Core Scientific. It was one of the
Core
largest.
Scientific.
Yes. I can't remember the other one, but it's not Murphy.
Don't hang on it. You're good.
It'll come out. Yeah. So what happened is they kept investing. They kept signing contracts with Bitmain or manufacturers of ASICs or the miners, and committing to these high prices. So a miner that at that time was going for $12,000 today, at this very moment, you can get them for about $2,600. So imagine that. It's like almost six times cheaper. And so when Bitcoin dropped in price, where we saw that double top and it started descending, now these mining companies had these contracts that they prepaid. They have to do a down payment to sign the contract, and then they have to pay those prices upon shipping. Well, imagine now they were paying 6 times what they could get it today. Pretty much a few of them didn't have any other option but to declare bankruptcy. They were trying to get out of the contract. They couldn't do it. Now they had to declare bankruptcy. So that's the over leveraging of the position, when you put too much capital at the wrong time. When they should be going in hard is during these times. Yes, is these times. And that's where this bear market has been different. This minor capitulation has been different. It's been bloodier, of course, because you see shenanigans in the financial area, and these same financial companies are the ones funding the purchasing of the miners, a lot of them. So it's like top to bottom, you're seeing these capitulations occur. And we're also seeing sale of Bitcoin. Traditionally, people during these bear markets would be mining it because they have enough money, enough runway to produce.
Yep.
And that way, by the next bull run, they sell the tops. And you can actually see the hash rate drop with the price. So the mining companies that have that vision and understand how to do it are selling the top. A lot of them are even selling the miners at the top, because they know that with that capital that they're gaining, they can buy it cheaper at this bottom of the bear market. That's a lot of the dynamics that are different. So quite a few more mining companies than I expected went bankrupt. Riot is doing it correctly because they have control of their power purchase agreement, how much they're paying for their power. And there's a few other industries that are making the right moves today. And we're actually involved in a few of those opportunities currently, because we do not over leverage. We actually let the investors know, hey guys, we're reaching a turning point. So this is the time to build the war chest, cash out, build that war chest. And then when we're at the bottom of the market, that's when you start getting back into the buying the assets themselves, because the miner themselves, the ones that are worth 2,600 or the higher end ones, 3,000 and change today, they will be worth 12,000 up to 15,000 in certain moments at the next bull run. So not only are you making money on mining Bitcoin, you're also quadrupling, tripling, or quadrupling the value of your ASIC, the asset itself. So
that's the secret sauce.
It really is.
And so the whole idea here is, don't be like these guys, because a good business buys high and sells low. That's how you make money. Wait, that's a joke. Don't do that. Don't do that. Stop it.
Bad dog.
Yeah. So the people are getting played. They're just, there was a lot of dummies who are like, yeah, max bidding all the way. It's only green, only green, only up, and they were doing that, acting like it was some bottle flip game. And like in Silicon Valley, you ever watch that show from HBO? They're like, always blue, always blue. Oh, that's literally been like the Bitcoin mining market. People were just like, yeah, I know we're in a bull market, but yeet. And they just like spent
Yeah.
a ton of money on it and just kept doubling down. You've seen this at casinos though. Like you'll see some guy play blackjack and he'll be up like a good amount and he'll just keep playing. It's like, leave the table, bro.
Yeah.
Like, what are you doing?
You gotta know when to fold.
Just always doubling down is not the move, bro. It's not
Yeah.
the move. But anyways, this article here continuing. When times are good, miners stockpile their Bitcoin, restricting the supply of new coins during high demand and serving as an additional multiplier to the general upward price trend. When times are bad, like the past few months, which we've totally seen, miners sell their Bitcoin treasuries, usually to cover operating expenses when mining is less profitable. And that's exactly what's happening. They're having to close shop because they're pooping the bed.
And see, and I don't quite agree with how they wrote those two paragraphs just now, because they say when times are good, they're holding it back. Yes, they are. What few people realize, but you can see in the price action, is when they know the top is the region of the top, they actually dump when the times are good.
Of course.
That's when they sell into the market. Not only do you see that, you also see the hash rate drop in parallel. You and I just did that exercise, that financial exercise in the charts, where we could see the hash rate drop with the price, and you could see the market flooded with Bitcoin at these tops because they know this is the time to exit. So, and then they say when the times are bad, like the past few months, miners sell the Bitcoin. No, the ones who planned already sold the top.
If you're dumb and you poop the bed, yes, you have to sell your car to pay for your over-leveraged mortgage. Absolutely.
The YOLOers are the ones that are selling during the worst times.
There were some big YOLOers, though. Can we agree on that?
Yeah. Yeah, bro. And this market has been, and it's easy to explain. Previous markets, it's all speculators, but of the smaller size. This market, this bear market, you have more institutions playing. So they're the ones that YOLO'd in. They should have learned from the retail market that began this, and they were waiting for institutions. Well, the bigger institutions are about to enter once we get clarity. So yes, that's a little off. The guys that said yay at the top of the market, they're the ones selling now.
There's different groups of people, and I think they're talking about just one of those groups of people. They're talking about the guys who just double down every single time. Like they're literally max bidding on every single, you know,
buying every dip from the top of the market, not buying every dip when the market's forming a bottom. It's two different philosophies.
Yeah, dude. But great perspective on that, Jaime. Let's finish this article real quick. Back in June 22, for example, a report by Crypto Analysis at Arcane Research revealed that during the month of May, publicly traded Bitcoin miners like Marathon, that's the word you're looking for.
Marathon, that's it. Those are the guys.
Thank you. Marathon Digital, they shit the bed. And Riot Blockchain sold more Bitcoin than they mined. A stark reversal of fortunes from the first 4 months of the year, when the same miners sold less than a third of their earnings. And so that's kind of the big idea here. Basically, the whole pattern is big miners were only selling what they needed to sell to just pay the electrical and basically mitigate the risk that they're holding onto themselves. But during the bear markets, it doesn't make sense for you to sell your Bitcoin at a loss. It makes sense instead for you to have a war chest from when times were a little better. And you can just kind of float. You can just pay the electrical bill. You can just pay the utilities and hope that the bear market's not too long. And once the bear market's over, you're glad you did that because you hodled all this Bitcoin that's worth 3, 4, 5 times what that money you spent just to keep the lights on was. And that can go partially into your war chest for the next bear market. A lot of companies weren't doing that. And what this is saying is that they just were way over leveraged and did not make good financial sense. And Marathon woke up and found a cold little turd in their bed and a dog spazzing around. Who pooped in the bed, I wonder? Who did that? Could it be the dog that's freaking out in 3 or 4 in the morning? Probably. This cycle's been different though. CoinShares Bitcoin research lead Christopher Bendix, I won't say words anymore, told Decrypt. So maybe this guy's smart. Jaime, if you can make a point to talk to this fella, we'll take him out to get some biscuits and tea. When you had a much less efficient capital market, it was probably a lot less orderly, and we saw the manifestation previously as these big pullbacks and difficulty. That was worded terribly. He said, comparing the current network to the industry was less established. That's true. That just hasn't happened this time, even though we had speculator bankruptcies and a bunch of operating struggles. So yeah, people are certainly running things differently this time around. And I don't know why. I almost wonder if there's like some conspiracy Friday. No, legitimately, I kind of wonder if that's the case. I wonder if some of these companies are like, hey man, you have your company poop the bed, go bankrupt, and then my company will buy you out at really low prices and we'll give you some skin on the top. Maybe that happens. I don't know. But Conspiracy Friday, maybe that happens, right? Oh my goodness. So yeah, this is super funny actually. So our last article for the day here, Jim Cramer's ETF goes live. So Jim Cramer is this clown on mainstream media who does this show called Mad Money where he pretends that he knows what he's talking about, and people have been just trading the opposite of whatever this guy trades, and they make money doing it. Just whatever this guy's like, you gotta buy it, it's so good. If you just do the opposite of that, you do well. Or if he's like, sell it, it's crap, buy more of it.
Inverse Kramer is what they call it.
Yeah. And so there's an exchange traded fund for Jim Cramer, which is hilarious, that goes live, and people just are counter trading his ETF. They're just flipping the
Are you serious? Let me find that ETF.
Yep, that's what this is about here. So let's read this. So 2 ETFs began trading on Chicago Board Options Exchange on Thursday that are focused on stock picks by Mad Money host Jim Cramer.
What was the ticker? What was the ticker at the top?
It was S Jim.
So Inverse Kramer, that's the one I believe in.
L Jim and S Jim.
Yeah, I'll do the inverse. So S Jim.
Kids these days. So the newly launched exchange traded funds will either trade in favor or against the stock recommendations of Jim Cramer. What a freaking meme. This is meme stocks. This in the traditional environment. That's what this is. Cramer is the celebrity host of CNBC's Mad Money. The funds could short sell his stock recommendations of purchase businesses he advises against. Both ETFs are actively managed funds.
Bro, it's real.
I know. This not like this is like meme. This is crypto memes finding themselves like they like opened the wrong door and found themselves in like the traditional markets. Like they have food and they just stayed.
Bro, this is fucked up. You know why? No, it really is, because Bitcoin can't get an ETF, but Jim Cramer can.
I know.
What the hell?
What the hell?
Holy shit.
Indo's like, wow, dude.
That's fucked.
Yeah. This is memes. This is quality memes. So Cramer's ETFs don't involve him directly. Yeah, sure. Okay, bud. Keep telling yourself that. Jim Cramer has 2 new ETFs to his name as he gained notoriety for his subpar cryptocurrency investment advice.
Yeah.
That's so polite. Subpar. Like absolute trash. Yeah. The Securities and Exchange Commission, the SEC, received the preliminary prospectus for both funds in October 2022. So the advisory company behind the ETFs is Tuttle Capital Management. The 2 guys. Cramer. Oh, I clicked it. Why? The Cramer ETFs listed March 2nd. So yeehaw, that's yesterday.
Bro, and it's there. It's
Inverse
live,
Cramer and I know. Inverse Cramer and long Cramer is yeah.
Bro, that's the perfect indicator that we can use.
I love it so much. So short or long 20 to 50 stocks, ETFs by monitoring Cramer's positions on those names on CNBC Twitter daily, held for 5 days.
Wow. Bro.
Look at this guy's face. Like that just cracks me up. Like,
yeah. If you guys look at his history, even during the implosion in 2008, he kept saying everything was safe. I would invest in this, and then, bro.
Yeah, love him or hate him, Jim Cramer is a polarizing figure. Yeah, Yeah, he is. According to CEO and CIO Matthew Tuttle of Tuttle Capital Management, we want to give investors on both sides of the debate a way to express their views, aka he wants to capitalize on memes. That's what that means, and create products that can provide diversification to traditional portfolios on memes. That's what that means. According to the prospectus, the ETF advisor keeps tabs on Kramer's stock picks and the general market recommendations throughout the trading day. This includes public recommendations via Twitter or his CNBC television shows. The fund trades equities or ETFs, including inverse index ETFs and index ETFs, to take the opposite position. That said, the ETFs do not directly involve the television personality. Therefore, the trust, the funds, and the fund's investment advisors removed all affiliation with Jim Cramer or his media outlets. Did they? Because what I see is a little phone call could corroborate a pretty convenient scenario here. So I wonder if this is even gonna be up for very long, or if like, it's gonna be found having some legal holes in it. Yeah.
And you see, SEC allows this, a meme, and it allows it. All right,
Yeah.
brother.
Yep. Jaime's dipping out. Thank you so much for
You should.
joining us on Crypto and Coffee. It's been a fun Friday. This was fun. Thank you for this. Yeah, Indo says, goes to show who's pulling the strings and what the mass media, they want the mass media to be paying attention to instead of the real picture. BTC all the way. Real talk, dude. Ed Gundy. Yo, what's up, boy? Yeah, happy freaking awesome Friday, bud. Yeah, nothing to see here. Move along. Yeah, like it's not some game being played. Exactly. So anyways, I am the Data Lord. We were joined by Jaime. This is Crypto and Coffee, where we drink about coffee, talk about crypto. It's a joke. I hope you have a wonderful Friday. If you would, make sure you DCA, leave a like, subscribe, leave a comment, share this with your friends if you think this could benefit them, and keep calm and huddle on. We'll see you on Monday, good friends. Woo! Yep. Woo!